Good morning. Well, glad we waited yesterday. Could have been a painful morning. Well, things are all good here. I was just telling Dan, this seems like an opportunity to sell some out of the money puts. I wouldn't mind holding the spiders or owning them down around 270-ish or in that area over here. So we'll see. You can see how they've retraced up into this area here. And let's look at the futures since it's 24 hours. So you can see they're retracing up into where they stalled. Good morning, Alex. So seems like an obvious place, move up. Negative sentiment here this morning, trade wars, blah, 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 again. And, I guess they're a game of chicken, so to speak. Who's going to blink first? Who's going to, start playing nice and whatever happens. And so I'm thinking at this point, it sells off here and comes down into this area again, maybe goes lower on some type of climactic sell. And that would be the point to sell some puts, lower the cost. And I'm not, just based on the weekly time frame and so on, longer term internals, I'm not opposed to being put spiders. So that's my thought. I'll see exactly what does happen and how it all sets up. Qs here actually doing the retest and far above the swing low, which is okay. I mean, kind of makes me pause and think, will the spiders actually get down there, or will this actually extend lower? It's a pretty wide range bar already. So that pot, can it get much bigger than that? Yeah, of course it can. I mean, look at the size of these bars here. Is this the start of this? Honestly, I don't know. I mean, we're going to see how things set up here today. We did have the option traders go a little wild into betting on the call side the middle of last week. And trade wars or no trade wars, the expectation was that we were going to get some corrective action because of that. And now here it is. It's just amazing. It always is amazing over the years to see how some news or whatever happens to come about at the time the internals start to line up to say that's what's supposed to happen. So I like it when it works, and of course continues to work over many years now, going on decades. So good stuff. So we'll see what this does here. We'll see how things set up in different sectors and stocks that are taking hit. I noticed, Amazon was actually down 17. Now it's down 13 and change. So really, well, it's gapping. Where is it there? 1700. I guess it's gapping under that green bar there, that reversal. Yesterday, as you know, buyers stepped up and there was a lot of reversals there. And kind of was like, do we step up here and enter long positions here on the close? And what I reviewed yesterday was, well, let's see what happens tomorrow, because the hourly charts are still in downtrends as we looked at the broader markets. And it was like, another day, or maybe even two of holding that area or whatever bottoming tail bar would align the intraday charts with the daily charts. And now we get this gap down to deal with. And so we're going to need some more information. But as far as considering selling an out of the money put, that's totally aside from, taking long positions in different stocks. And so we'll have to see what holds up and what doesn't, and so on. The Dow showing relative weakness as it does, coming into this area of support. It's already at the 50 MA. So this would be a good place, as it pulls back here, wide range bar. So you can see the angle that it pulled back is, on this day, obviously is about vertical. So things that pull back like this typically don't just turn around without having maybe this kind of price action or this kind of price action where it goes up and then makes a lower low and a bottoming tail bar. So while that pullback and wide range bar is suggestive of the end of this move here, we'll have to see how it begins to stabilize, or if it does, of course, the possibility it could come all the way down there, of course, and that's why we're going to give it a little time to see what happens between markets and how they act here in the first 5 to 30 minutes. Let's see where the Russell is. Now we got a wide range breakout bar, and it was down near that low, but it's recovering already. So we'll see what this does. Maybe because of this recovery, it goes sideways for a while up there while the other market's correct. That would be supportive of the broader markets eventually working their way to the upside. Transports are down 198, down near the bottom of the wide range bar. But overall, well, we'll see where it ends, but gapping down near the low of a wide range green bar that was a gap bullish reversal is never going to be interpreted as being positive, but we'll see where it ends by the end of the day. And looking at the 30-minute, 24-hour chart, we see that it's just a consolidation there. There's that low that it's holding at, and we'll see whether that's hold and goes up or whether it rolls back over. Again, we're looking for information to put together the pieces of a plan as to, is this uptrend going to really fall apart? Is bullish price action that's been going on for a while, or is this just another gyration that results in just another buyer stepping up, scooping up shares? The prices will eventually work their way to the upside, and all of this is just whippy back and forth. So we need to get that information. Bonds continuing to recover here, pushing up a bit more. Oil retracing yesterday's big bullish reversal bar, and we'll see where that ends up. If it's pulled back to where enough, it would be enough if it's going to hold that reversal, or is this turn to a measured move and go down? And okay, this eventually does get down to what this targeted area was for this measured move. So when we see a pattern occur, big down, a reversal, it fails, we immediately look to the next support. And in this case, the thought was a measured move lower. So then a new pattern evolves that says, hey, you know what? Maybe that's not going to happen. And it was this churn up. Of course, then the big giant bar was like, well, this should be a bunt down to here now. And then the gap and reversal. So still a schizophrenic type of market going on here. And that's why, scenarios like this, it's like wider stops, because even what looks like a powerful reversal, maybe it just doesn't go very far, and it's a jiggle. The resistance is up there, and that's where it would need to get above to really have a more bullish bias on crude oil. It has to get above that area up there, which is now, since it made a new low, that's our major resistance reference point. Gold continues to move lower. Just been a market I've had no interest in, all this whippy price action here, and then the break, and then the grind, and whatever. Now the next leg down. So that looks like it coming down into this area here. And it's always an area. Got a new line. And I put the line here because that's where the closes were. So it would somewhere between there and there, somewhere in here. If it was to retrace, and that's about 50% of the wide range bar, and if it's really weak, it'll never even get there. It'll stay down here and then roll down to this area where maybe it'll make sense, you know, to do something with gold. This ITB, let's see what it's doing here. Actually looks flat, right? As much as you can tell by this pre-market chart, doesn't trade that much, but looks flat. Maybe it just holds up here because it's already been beaten down, and you know, the breakdown failure, which was the bottoming tail on the weekly time frame, maybe it's just been pounded enough to where sellers are not that interested based on some you know, trade war news to be exiting out of these positions here. I saw news that this, I don't know if Dan closed that position. There was a position in this one, and it's down a little bit news, but I read that the upside target was lowered it. So still a bullish view, but a little less so. But everything, you know, so much is being affected by that negative news. And just looking at things actually up. Of course, VXX is up. These inverted ones. MU got real sloppy. We talked Amazon. Netflix is holding up pretty good. That actually got an upgrade today. Got a target of $500. Tesla's down a little bit. I don't know if you saw there was some news out where Musk was saying an employee, angry employee, went and sabotaged some records and sent them out. I guess somebody doesn't like him for whatever reason. And looks like the energy thing is testing the low, so it was looking interesting there, not so much anymore. We're gonna have to see where things end up. And there's the home builders. They're flat, going through their bottoming process. Aerospace, of course, down, had that whip up there. Probably Boeing is getting beat up on this news. Yeah, down 7 points on a gap down. And I think that's about it for me on GE. Well, those brokerage recommendations, JP Morgan was saying $11 when it was around here. So maybe they turn out to be spot on with that one. We'll see. We'll see. That's it. All right, Dan, you can take it over.
Good morning, traders. Sound check, please. And I'm back home, so I got my wonderful Yeti. So, Pat, you will not hear me rubbing against the leather in the recliner. But you might hear some construction noise now. They're doing some heavy drilling across the street on this new house that they're building. All right, let's take a look at opens. And, you know, thank goodness we've been trimming our exposure all last week, Wednesday, Thursday, Friday. You know, I didn't do one new trade yesterday, you know, I didn't see anything, but, you know, the traveling also and the market gap down. And, you know, I actually had an email from this new subscriber, and he's all over Facebook, active, you know, responding to a lot of you know, my prior posts. And he's like, that he was taught on credit spreads to not, and we'll get into this more later. I don't want to take too much time now, but it's an important subject as I go through our opens, because that's what I'm demonstrating right now. That he says he was taught that whatever short strike that you sell, then that's your stop. So the conversation I had with him had to do with trailing stops, and I said, yeah, 50% target if we get it quickly. But if there's no reason to get out, then I'm going to squeeze more of the gain out. And, we had a great run last week. I think the weekly option trader, we closed everything out 100% profitable. Some at 50, some at 80, some at 94. So no, we trailed profits, and we don't have to sit through the pain, the pullbacks that we're having right now. We're out. We're in it for speculation, not for long-term investments, except, maybe the ETF trader. Yeah. So Greg, let me go through our opens here. But yeah, I just wanted to touch upon that because it has to do with trade management. Yeah, and it started on Facebook when he was responding to my slide, the one slide talking about some bullet points on how we manage our credit spreads. All right, let's continue. So ITB, Greg mentioned, STX, Iron Condor. So this gap down actually is beneficial to our Condor because it was acting more strong. So the threat was kind of to the upside. So I like the gap down today. Cuervo, we're gapping down, with the markets, but our strike is way the heck here, 80. So nothing to do right now. XPO, Greg mentioned, put spread. We just got to manage it. Wow, it's doing the same sloppy bit as it was yesterday. Oh, but if that's 110, that's not a nice gap down. That's gapping near the low of this, so that might be a problem child. I'm going to watch. CSX as a new trade did not trigger. This was one in our advisory letter that went through 3 rounds of covered calls. And we just let it get called away last week because of the overbought markets. And we're waiting for a new setup. With the gap down today, it doesn't look like it's going to trigger today. H, we have a covered call. And I put in there, we're going to, well, yesterday I said 30-minute low, sell a covered call against our long position. It didn't trigger. And then, I just said under a prior day's low, we're going to trail to sell a call with the same stop, of course. Costco, we still have a half lot of a put spread. RCL, I like this gap down also in terms of our Iron Condor. It was threatening the upper 115. Well, it's actually, this is one that gapped way against us. And so we did a condor just to give us some more premium. UAL, where the stop is Friday's low. And that's, the pattern, relative strength to the market yesterday. Look at this thing breaking out on the daily and weekly. So we're just in management mode, but if we get stopped, it should be at a profit. CCS, we have a way out of the money put spread, the 30s, or even 29s rather. Yeah, because we did it over the high of this bar. We sold the 29. Look at this, folks. If you don't believe in technical analysis, look at this wall of support on the weekly. So we don't care if it goes up, chops around sideways. It's all about our time decay and just holding that support level. WPX, we did not. I told them to hold off on the entry because the oil was rebounding too much, but this was a bear call spread candidate along with the sector ETF, XOP. And finally, PXD, we didn't trigger. Remember I was asking you yesterday morning, hey, should we, look for an alternate entry? And it really didn't give us one until this afternoon. I was traveling, but this afternoon breakdown in retrospect was ideal to leg into our out of the money call spread. We covered half yesterday, and now I can move stop over yesterday's high with this gap down. So I will be doing that shortly. And that's Zen. We have a covered call, which if it stops out, it's profitable. Here, HEAR put spread, that's still relative strength, holding very fine. Disney, we have half lot put spread left. Brew triggered yesterday. It was over this pivot of 2080. So that triggered into the close. Zulu Sierra put spread, gapping down a little bit, but still relative strength. That's fine. S back, we have a call spread. That's fine. And that's it. Last week we had double the amount of positions. So the biggest, this XPO looks like our only problem today, if it's really opening down there at 110. So, we'll just manage it as always. I don't have many gapping stocks today. Here's some, because so many are gapping that it's gapping down with the market. We just got to go through and, is the market getting oversold where we don't want to go short? We're just going to take it step by step as we always do. But I really don't have, a big bias here today. It's kind of everything's on its own page. It's a little Givo here. Look at it. Came out of a coma yesterday, and now it's gapping up another $5.50. But nothing to do with it. ASTC. Still in a downtrend here, but wide range bar, bullish consolidation. Look at that, in the upper 50%. But now it's gapping up to $6. What the heck am I going to do with it now? Nothing. Facebook. Yeah, yesterday I was stalking that for a put spread, but obviously didn't do since I was traveling. Let me look at the markets again. All right, Q's kind of stalled here. Spiders, all right, 274. Yeah, so I'm looking, Greg mentioned we're going to be looking for a put spread, oversold, but we obviously need a reversal before we do that. So Dan, are you in Facebook or are you looking as a new trade? All right, so, but I can tell right now, Dan, just looking at these 2 days, meaning yesterday, 15-minute chart, and today's gap down. Do you see how this gap down is now in the bottom half of this range? So that's, that's bearish. So I have no bias whatsoever right now on it. We just got to wait and see how things shape up. This was a, this IPO. Remember I mentioned yesterday, it came out on Friday, and now it's gapping up again in a weak market, 30.70. But I'm adding this one to my dance card, but there's no entry. CPRT. Oh, the reason I have this one here, I didn't even know it was gapping when I put it here, but one of my newsletters, a more reputable one as opposed to that clown that I look at every day. And I'll show you what the clown put in. That's what I'm going to call him, the daily option clown. We've been looking at his trades for over 2 weeks. I haven't found one that I've liked, not a single one. But this one is talking about this industry and automobiles and fleets and this and that and that. And that's very bullish on all time frames. I'm actually going to add that to my dance card. That's just a bullish chart. All right, let me find the one that this clown. Oh, it's this one. He says this one, PACB. Let me ask you all a question. If I were, without even looking at the chart, we have 1, 2, 3, 4, 5, 6, 7, 8, 9, 10 up bars, and you can calculate the percent rise, but you know, $1 divided by 260 is a big percent. So up 10 bars, 33% run. Do you think that's a good time to enter that position long? Yes or no? This clown's email said, just broke a bullish trend line. It's time to get on now. Do you believe the nonsense that people put out? Like, seriously, what are you smoking? It just broke a trend line. Come on, man. Look, here is your resistance trend line. Here is your wide range. Here is your wide range igniting. That drug, well, you know, moving averages are lagging, of course, so it didn't, this one bar didn't drag it up, obviously. But then you had a doji bar. I mean, that was your entry. Don't be telling me about buying something now, 33% rise, 10 bars in a row, you idiot. All right, back to work here. All right, this XPO. I still don't know what's going on there. It has yet to print on the daily chart. So all that's pre-market. I don't know what to do there. All right, let me just go through these again. I'm watching the markets on my other screens. So this is a bearish gap on our STX, which is fine. It helps our condor. All right, Curvo, you know, bearish gap with the market, but we just got to sit through it. Qs, all right, Qs now, look. See why I look at my pre-market data? It's breaking out of this horizontal resistance on the pre-market. I still don't have a bias. You know, if the weekly were to close here, that's still bearish. It's a bearish gap down, you know, breakout failure. So we're still in high, you know, damage. Well, not damage. We're in high caution mode here on everything. All right, CSX looks like CSX is now invalid because it took out the stop before entry. Our H, we're going to leg into that covered call. RCL, we need it to get weaker, so that's good. Our here is fine. UAL is fine. Zen, we're going to stop out at a profit or covered call. Brew, look, it's only down 20 cents. That's still relative strength. WPX from yesterday, we did not trigger. Nothing to do now. Will I am still looks great. Let me move the stop on that. All right, so now the question is, see, we're in trade management mode. Let me ask you all, where do you want the stop to be? Or do you want to take your profits? See, you know, Greg just finished an ebook I was reading last night for swing trading, and he spoke a lot about, you know, trailing pivots and this and that. But one thing he, you know, highlighted over and over again is if you want a bigger gain, you're going to have to sit through retracements against you. And I'm tighter than he is. That's just my personality. So I would say for starters, let's move it over 49. So let me post that real quick. We closed half at greater than 50%. See, I had to stop at 49. And this was interesting. Well, here, I'll post it here. Well, look, this is interesting. Well, let me give you the whole thing just in case you aren't a member. So this is our current position. We got a rapid 50% of max gain in 1 day. So that's where that guy I was talking to, you're an idiot not to take. And look, we avoided 34 days of expiration of risk. And look how I came up with the stop yesterday. I did that based on retracement principles. You know, it was in the morning and I'm like, okay, where do I want this not to go? You know, with the market was bullish. And that's where I came up with the number. So now I'm just going to move it to over 49. And then I don't have to worry about it. All right, back to the market. Spider's also holding this pre-market just for the fun of it. Let's check what the premiums are. I'm watching our XPO and it's holding that 110 level. Wow, even folks, I've said this for the last 2 days or whatever. Even with this gap down again, my unrealized P&L for the day is positive. So I have no pain, no net pain. Spiders, we'd look for Friday or maybe even tomorrow. So Greg, you were looking at wow, there's still not much juice. Well, that's relative term, I guess. The 270s for Friday are only 37 cents. That's still nowhere near our salivating premiums on this March fall and April, early May fall. You know, that's because of the VIX. Look at this. Even, can you believe this? Even with 2 days of nasty gap downs, the VIX is barely budging. And that's why, you know, when it was up here at 55 is when we got those juicy premiums. That's the problem. All right, go through open some more. ITB. Dan, we can go through them one by one. So, you know,